Hello and welcome back. I hope you all are doing well. I want to give a gentle reminder to subscribe, like, and share the video. Now let's get to the news. The 30-year fixed mortgage is sitting at 5.363, subject to change, of course. The crude oil is $102 a barrel. The 10-year Treasury, U.S. Treasury, is at a whopping 3%. Gold is $18.69 an ounce, while silver is $23 an ounce. I mentioned in my other videos how during the health crisis, the health event, people were cashing out refis because mortgage rates were at an all-time low. Was it 2 to 3%? And also people were making massive spending on purchase of goods, and they did use their credit cards to make those purchases. Now, I read through prnewswire.com, and they go into a little depth there about the numbers, because numbers don't lie, or do they? Okay. So according to crypto.com, Visa card spending was up by 55% per user in 2020, while online spending was up by 117%. Isn't that incredible? Well, I thought it was. Now, the reverse is happening where consumers were spending on products more than services. Now they're spending more on services than on products. So I was reading an article on Wolf Street titled "Consumer Spending Shift from Goods to Services." And in the article, they talk about, quote, real spending on services such as airfare, theme parks, healthcare, education, car rentals, haircuts, and housing, if I didn't already say that. And they said that accounted for 61.6% of consumer spending. Now, a person on there commented, he was Wisdom Seeker. He said this, quote, it was interesting, so I said, let's share. The stock market is being cruelest to the service-heavy sectors. And it goes into the data and the numbers. So they are the following. Communication services plunged by 24.5%. That is Google, Facebook, cellular services, cable. Consumer discretionary, which is like Amazon retail, I can imagine, it declined by 20.57%. Infotech, that's Microsoft and Apple, dove by 19.7%. Financials declined by 12.71%. Industrials 11.46%. Real estate dove by 9.91%. Healthcare 9.85%. And energy, interestingly enough, went through the roof at positive 36.65%. Now, on that positive note, Airbnbs are expected to have 70% revenue growth in the second quarter. And you're thinking, oh, how's that possible? Well, CNBC said that Airbnb reported 102 million nights and experiences booked in the first quarter. I guess that was an indicator in some way of what's to happen in the second quarter. Now that we spoke about that, let's go back to the month of April, where the demand for goods in the manufacturing sector was at a 7-month high. Now, Chris Williamson, he wrote an article titled SSP, Global U.S. Manufacturing, PMI, Purchasing Managers Index. He indicated that the survey data there showed economic growth in the second quarter, but that these inflationary pressures would stunt further economic growth. Quote, he said, both input cost and selling price inflation surged higher, the latter accelerating to a near record rate as firms face rising energy prices, ongoing supplier-driven price hikes amid strained supply chains and rising wage costs. I think that's it. Thank you for watching, subscribing, liking, and sharing. We will take care. God bless you. We'll see you in my next video. Thank you.